got to begin with this. The biggest kahuna of all, and that is Apple. To its core, Apple crushed the quarter. A huge beat, and the stock responding to the upside. Earnings per share coming in at $4.99, 60 cents better than expected. Sales $5.5 billion better than the consensus. And you just heard from Apple CEO Tim Cook because he spoke with our Josh Lipton, who joins us now live outside of Apple's HQ in Cupertino. I got to imagine there's a lot of smiles on the faces, Josh, because the quarter
than expected, $56 billion. Apple CEO Tim Cook telling me it was the 11 that was services margins in the quarter clocked in at 64.4%. Street was looking for 13. China revenue up 3%, and talking about that guidance too, Brian. Q2 they are guiding for between 63 and 67 billion. So the midpoint there better than what Street was looking for. Analysts had modeled closer to around 62.5 billion. Did have the chance to chat with Tim Cook. One issue we did discuss was the coronavirus. Obviously, investors concerned what that virus means for Apple's business in China in terms of demand, in terms of production. Apple CEO Tim Cook told me he's going to have more to say about that on the call, but he did note that, as you can see from the range, and there he's talking about that Q2 guidance, it anticipates some level of issue there. Otherwise, we would not have a $4 billion range, he told me. He also noted a couple points, though, that he's made, some measures he's already taken, Brian, in response. And finally, just going back quickly to that iPhone number, the revenue clearly much better than the Street was looking for. The iPhone 11, I did ask Tim Cook why he thinks that has proven his most popular model there. He said, listen, he pointed to the battery life, the design. He also noted he thought he had really nailed the price point there with the 11. Remember, $50 cheaper than the 10R last cycle. Guys, back to you.
Josh Lipton out in California. And Josh, I know the conference call is beginning right now. I know you're going to hop on that. You get any headline, phone gets all the attention. And it is still their big dog. Wearables, mostly the AirPod, went to $24 billion in revenue, doubling in just 2 years.
Water on this quarter. Margins have been great. Revenue beat, EPS beat. But now service revenue as a percentage of overall revenue, I think, is around 14.5%, which is sequentially lower than it's been. Again, I'm not making a big deal out of it, but if the bull case has been you're getting a different multiple based on this new product mix, that's concerning. Again, I'll say this. Apple traded at a discount to the broader market for many years. Now, with this quarter and with this price action, it's trading at a significant premium to the broader market. Just something to throw out there.
And Guy is right. And it seems like universally people have had to acknowledge what's happened with the stock going into this print. But and this print was extraordinary in a lot of different ways. I mean, first of all, think about where we were a year ago. And when Tim Cook tells you he warns that their most important quarter was going to be difficult, we got to a place where it set the table for a stock to move 2 times since that moment. But if you think about the multiple that Guy's talking about, why is it trading where it is? Well, some of it make an argument that Apple actually, like some of these companies that traded, as a sum of the parts. This should trade as the whole more than the parts because of their ecosystem, because the economics of how this company trades. And finally, if you look at the supply chain, we were not expecting, based upon some of the numbers we even got out of time a year ago when they had 360 subs, they were going to move to 480. They're at 480 and they're at 1.5 billion subscribers.
Let's be clear. Karen. Apple's wearables business, which did not exist 5 years ago, effectively. The S&P 500. They've created an entirely new business while maintaining the iPhone franchise. It's truly incredible.
It is. I mean, that's extraordinary. I mean, the gross margin, that was really impressive. I'm not sure exactly how they got there. I don't know if they sourced better, given that the mix was different than we thought, more phones. One thing I'm wondering, how long does it take, once you buy a phone, how long does it take to gear up to have as many services as you're going to have? Some you do instantaneously, I would think, right, when you buy the phone. So I don't know if having this now bigger installed base, we'll start to see additional services revenue on that base. That would be good. Absolute number.
Karen, I would just add here, and I think Tim touches on this. Remember, a year ago, the stock bottomed on a terrible quarter. So nothing prevents the stock
and
nothing prevents the stock from topping on a great quarter here. And what led last year? When you look at the low we put in, down pretty sharply over the last couple of weeks, down 10 to 15. 10% drawdown on Apple gets respect that the semis have already started to roll, and they lead this stock.
Okay, I want to come back to wearables in a second, but Chris, I want to stay on the technicals if we can. I was looking at a 10-year chart just coming to the set. Apple has never been this far above its 200-day moving average in the last decade.
Look at the performance over the last 12 months. The stock has doubled. When you've looked historically, that's happened 5 times in history where the year-over-year change is up 100%. Over the next 12 months, the stock is actually up on average about 30%. So just because it's up a lot doesn't mean the next year can't be good. I'm just worried tactically for a lot of the reasons. And look at the leading indicators of this stock. They've already started to roll a little bit. I think it's a problem in the short term.